Meta is the largest social media company in the world. They are also heavily expanding into other aspects like AI infrastructure or their smart glasses. In today's video, we're going to look at whether or not this already large company can grow even further and if buying it at today's price could offer some value. For that, let's look at the numbers. First off, last year they made $164 billion in revenue with a net income of $62 billion, which yields a profit margin of almost 38%, which is very good. And they're currently priced at around $646, which gives it a PE of around 26. So it is a bit more on the expensive side, but for such good numbers, that can be reasonable. First off, we're going to look at a bear case. In case that the AI race slows down, the yields decline, it doesn't bring in as much profit. But Meta is still expanding their ads business and they have other technologies like the Ray-Bans in production. So they could still experience a significant amount of revenue growth. But this AI overspending without it gaining much yield in this case, I would give that a bit lower profit margin of 30%. Still very good. They have been buying back some shares in the past, so I would assume a small continued buyback in this case, but not very much. I would still give it a PE of at least 20. That might even seem a bit low for such a already large company with even still 10% revenue growth in the bear case, but I'm gonna leave it at that. That would take the stock price to a price of $720. And if we buy it at today's price, that would give us an annualized return of 2% over the next 5 years. But in contrast to that, we're going to look at a bull case. For that, I would give them a bit higher 13% revenue growth. You know what? Let's go a little bit higher than that. Let's say their AI infrastructure and the Ray-Bans really drive up the revenue, maybe almost doubles it. So that is a bull case indeed. And their profit margin stabilize it as around a 35%. Keeping it, somewhat reasonable. They are spending a lot to get this infrastructure rolling, so I'm not expecting a huge margin increase here. But maybe using a bit of extra capital to buy back a couple more shares, but still not moving as much. And for a company of this size, growing at 13% revenue growth, I think I might go even higher with the PE, because if a company of this size grows at 13% revenue growth, I think paying a PE of 30 can be reasonable. So let's look at the results here. That would take the stock price to a whopping $1,670 if bought at today's price, which would give it almost a 21% return. So those numbers are looking already way better. And if we average that out, that would take the stock price to around $1,200 with an average return of 13%. So Meta, for me personally, is looking interesting here. I don't know if this margin of safety for me personally is high enough regarding the bull and bear case, because getting a 14% revenue growth as such a big company can be tough. That is a lot of price in order to get perfection. So I'm definitely keeping it on my watch list and will be happy even if the stock drops a little bit further down. I might start a position. But yet again, you have to make your own assumptions, and please let me know what you guys think down in the comments. And thank you for watching. See you in the next one. Bye.